It should come up any minute now. All right. So it says we're live. You'll probably. So hey, I'm live with Chris. Sell the fucking rip trader. He is at STFR Trader on Twitter, and I'm John Tate, JONTAIT on Twitter, and I'll be enjoying this Bohemian breakfast beverage that I never had one before. Uh-oh, looks like Chris just dropped. Well, he can call right back in. And today is February 22nd, and the market had quite a swoon today, so we're going to probably start talking about that. Yep, here's Chris. Hey, Chris, got you back. Hello.
The TV, I just found you live.
Oh, gotcha. Okay.
There you
Cool.
are. Okay, cool.
All right, so just so everyone knows who's listening, there's a little bit of a lag for Chris on the video. So I'm going to try to speak to what we're seeing, and Chris will probably be pulling up charts on his side. So I got, Chris, right now I have the SPY chart up, and it's a daily chart. And a lot going on there with that.
Spy. There you are, daily.
Yeah, let me just keep zooming in on this.
All right. Yeah. It looks like dog shit.
Yeah, it's rolling over.
It looked like we were going to hold, like you were saying, and then all of a sudden, we created a wick and closed on the low.
Yeah, and by the way, the 21-day EMA is right above us. And so, you know, if that doesn't hold, then it's kind of open-ended how far we could drop. And there are some tailwinds pushing the market lower right now. But yeah, I mean, what an ugly candle. And we see the moving average ribbon kind of starting to fold under. And so, I mean, this is, if there's a support here, it's like a very temporary level of support.
I have 3 different targets, not on the SPY, but I have them on the ES. And one of them I thought we were going to take out today, which is 38.57. And we almost got there and just never touched it.
Yeah.
We got to, oh, go to hell. We got to, where is it? You could probably see it better than I can. I'm trying to do, there we go. We got to 38.61.25. So I was about 4 points off.
Yeah.
And
so let me zoom in here.
On my Twitter. Sorry, go ahead.
One thing I do is I'm looking at the 10-minute. And I've got 14 period RSI on this, and when I look at the 10-minute, it's by the time it gets oversold on the 10-minute, it's generally a low, but it hit the oversold and just held it all day and kept sinking lower. So what looked like kind of a buy opportunity to me, like it hit it numerous times, like
early in the morning. Yeah, I was looking at the same thing.
Yeah, right here
you
could.
At it on the ES, but
it just held it. It just held it, and then yeah, you're right. It tried to fight back, and it kind of hit its head on some earlier support that became resistance, and turned around and closed lower. Ugly close. But I mean, silver.
I was using the ATR trailing stop on the 1 hour as my guide, and it touched it. It touched the trail stop. And then it just couldn't punch through, and I was like, all right, that's it. We're going lower.
Yeah. Now, were you doing like SPY options that expired today or anything like that, or?
No, I was observing today. I wanted to see what the market was going to do because I wasn't sure when it looked as weak as it did in the morning. I've been faked out before on the SPY.
Yeah, Mondays tend to be momentum days, but I mean this one.
I just did not even. I wasn't falling for that trick again.
Yeah, so I actually liquidated a few positions today. I haven't got out of Workhorse yet, but I put last week. I put on Fubo, and I got out of that. I mean, it just looking at Fubo, it's kind of running out of time to be making the handle. It's going the wrong way now, and it's now below its 21-day moving average. Like maybe I'll get back in if it goes above it, but while it's below it, there's no reason for me to be in it. You know, because I'm caught off sides. Is how I like to think about it. So so Fubo kind of went off sides today, and I got out of it. Even if it breaks out from here, it's going to look funny. I'm not saying it won't. And there is support at this 40 level. It's kind of a pivot price, the 40 level on Fubo. And it's got the lower Bollinger Band coming up on it. But, I mean, the Bollinger Bands are narrowing. And so what happens is when that happens, it can start to expand again and just ride the lower Bollinger Band lower. So, you know, I'm very cautious on that. So I just got out of the way on this one. What else did I liquidate?
Did you ever use the Bollinger Band with the Keltner?
No.
Try this. Use the Bollinger Band.
Okay.
Like you have. And then take away the midline. And then you're going to also do the Keltner, and you're not going to change any of the settings. And you're going to take away the midline of the Keltner. And you're going to make the Bollinger Band one color, and you're going to make the Keltner the other color. When the Bollinger Band goes inside of the Keltner, that's considered what's a squeeze. And if you use an accumulation distribution oscillator on the bottom, when you see that release and your accumulator distribution swings to the upside, you're seeing more distribution. That's probably a good confirmation that it's breaking out of what's called the squeeze. It's a John Carter thing.
Yeah.
And,
I'm not seeing Keltner channels here at stock charts. Maybe they don't have that.
Right there. You just passed it. Go up,
I did?
up. Yeah, go. Oh, wait.
Oh, there it is. Keltner channels. Okay, there we go.
You're on a lag, so I
okay. Yeah, I got you. I got Keltner channel on there. Okay.
Okay.
So, I mean, I don't know how to get rid of the midlines on here, so don't worry too much about that. But, I mean, I could see, like, the orange is Bollinger Band and the brown is Keltner. So I've got that on there now.
So when the Bollinger Band goes inside the Keltner, that's when you are looking at a squeeze.
I got you. You know who does something similar is... oh gosh, he loves the bands, but I don't think he really likes Bollinger Bands. What's his name? If I think of it later, I'll mention it.
Volkowski?
That's not who I was thinking of. But I mean, look, here's an example of that squeeze right here on the chart. Like you can see the Bollinger Bands come inside the Keltner in December on Fubo, and then it ripped higher. So that's an example of what you're talking about, I think.
Yes.
Okay.
That's exactly what I'm talking about. Now, if you use that with a lower oscillator, like an accumulation distribution, once you see the distribution and you see the squeeze pop, boom, there you go.
All right. So what else I get rid of today? I did some trimming. I did some adding too, but I kind of changed up the format for some of the trades that I'm in. Let's see here. Gosh, I know I liquidated one other thing at least. Oh, it was Laser. So Laser is another one that kind of had like a breakdown. It closed underneath this recent support. And I mean, yeah, you could say that 30 is a pivot price level, but I don't want to stick around when the market's heading lower. So anyway, I got out of Laser also. It just... There's other things that are ripping. I just don't need to have money tied up in this while it bases. It's either heading up towards the top end of the range, or I don't want to be in it, really.
Are you talking about LAZR, right?
Yeah, LAZR.
Yeah, I see that garbage box at the moment.
Yeah, so that kind of brings us over to, I wanted to talk about Tesla today. Because it finally kind of had a big breakdown from the flat base that it was in. And it looked kind of climatic to me near the open. I thought, it's probably not going to go that much lower. And I got some out-of-the-money calls expiring Friday, some short-term weeklies. And I ended up having to roll those lower near the close. Like when it hit around 7-11, which is actually turned out to be the very low of the day, I rolled down 20 points my strikes. I think I went from 805 to 785 expiring Friday. Which, if you look at these moving average numbers I have here, the 9-day EMA is 788. So, and those are going to get pulled lower, as even if the price rebounds, because they've got a downward drag on them now because the price is lower. A what?
A ribbon? Moving average ribbon?
Yeah, and I look at price levels. I'm mostly focused on the levels and not so much looking at the, all these lines on the chart.
Right.
I'm also looking at how they are moving relative to each other. What's that?
That looks like it's going to make a turn and not come back for a while.
Yeah, it may not. I mean, I had a bear put spread on Tesla that expired last Friday that would have been screaming had I bought it a little later with more time on it.
Yeah, I don't know how many times I've ran out of time.
Yeah, and that's okay. So, but Tesla is the driver of the market right now. It's like one of the most important stocks out there because I'm going to go out to FinViz real quick and show you guys this. FinViz. And we're going to go on to the screener. I wanted to show some stuff on the screener later for the SPAC companies. So we'll come back to that later. But if you just come in here and you don't even have to do anything but sort by market cap. And
I'm still looking at Tesla. I'm sorry.
Yeah, that's all right.
You're on FinViz.
Yeah. So coming into FinViz, if you just sort by market cap, you see that Tesla is number 8. So that's how important this company is. And look, if you look at their like price to sales, some of these financial numbers. Let's see here. Maybe that's valuation metric. PE for Tesla. PE for Tesla, according to FinViz, is 1,000 right now, or over 1,000. And so when the PE numbers get ridiculous like that, it's almost a meaningless number. But looking at like price to earnings growth, it stands out on this list. Like it's more than it's about 3 times the next highest one, which is JP Morgan in the top 20 for market cap. So the point is, we've got this outlier stock that maybe they're going to make all their earnings from Bitcoin. But I mean, if that's what you want, if you want exposure to that, why wouldn't you just buy Bitcoin? The reason people are buying Tesla is because they want exposure to electric vehicles and innovation. And so, like, I get it. Bitcoin is kind of a fintech thing that they're folding in there, but I mean, all the earnings can't come from that. So I mean, just looking at all these metrics. Tesla is a standout.
I think they're buying Elon. Honestly.
What do you mean?
That they're investing in Elon, not necessarily.
Oh, I see. Yeah, when people are buying Tesla, yeah.
It would drop. It would fall from the sky like a duck during hunting season.
Yeah. Well, I mean, the market cap on it is insane. Like, if this thing doubles again, it'll have a market cap bigger than $1 trillion. Right now, there's only a handful of tech companies that have that.
Right.
And with Apple, like, it's not really surprising that it's Apple and Microsoft and Amazon. I mean, it's...
So, during the call before we came on, I was looking at the makeup of the NASDAQ. I mean, I actually looked this time. I didn't just glance over it.
Yeah, let me see if I can bring that up.
Was taking a crap today, and I found like maybe 7 to 10 that were in the green. And I thought to myself, well, all right, let me look at the Qs. So, because I usually look at the NASDAQ futures, but I thought to myself, all right, let me go over and look at the Qs. So I have this thing. It's called I have this candle color setup that is not just green and red. It's got 4 different colors. But I'm not going to get into that. So the colorations, the markings of the candles dictate which way a stock is going to perform. And the cues look horrible according to the candles, the colorations. So
I got you. So sort of like Heiken Ashy bars?
Kind of, but the candles are colored green, red, obviously, yellow, and light blue.
Oh, okay.
And when it changes from light blue to green to red to yellow, that 4-candle color combination means look out below.
Yeah, I got you. So I can put Heiken Ashy bars on this. And let me just clear off some of these other things a little bit, and we can look at it on Heiken Ashy bars. Because I think that might kind of show a similar thing like what you're talking about. And let's zoom in on it, okay? So I'm going to look at 1 hour bars with Heiken Ashy. And like, it's yeah, so I mean that. Take a look at that. It'll let's give it a second for it to show up for you. Okay, you should be seeing it now.
I'm still looking at the bottom.
QQQ 1 hour bars. Yeah. So it looks ugly in Heiken Ashy bars. By the way, there's a book by a guy named Heiken Ashy Trader. And it's a very good book. I don't know if he has more than one. And I don't know that he's the guy who invented the bars. But I mean, that's his pen name. It's Heiken Ashy Trader. And that was a really neat book. I think it was just an ebook I got for like $1 or something. I don't know, but it was awesome.
If you go to the daily of the QQQ, and this is what shocked me, I didn't even realize, it gapped down. And it closed on the low.
Oh yeah. It looks nasty.
I'm looking at a gap and go easy here, but instead of doing the cues, I look for the most, the weakest one that I thought had the most potential to fall, and that I came up with was Dollar Tree. So I entered Dollar Tree.
All right. Well, hey, what's the symbol for that one? I used to know it, but I mean. DLTR. Okay, yeah, it's been a long time since I've been in this one.
So based on the Q's performance and based on the Dollar Tree's performance and how much it had to lose from its current position, I decided to take that trade.
Yeah, you know what about that I like about this is I see this broadening formation on the daily chart where it's like it keeps on like just barely moving outside the range, falling back into the range, and then crossing over on the other side and expanding the range. It's a megaphone formation, and so this is ripe for a waterfall decline. Back when we were seeing flash crashes, like in 2010, 2011, there was a real problem with flash crashes. And these charts would make this megaphone pattern before they completely imploded on a flash crash. It would happen to individual stocks, it would happen to small cap stuff, it would happen to indexes. This is that pattern. It's essentially the range is blowing out just by a little bit on each side, and it gets wider and wider, and now it looks like it's rolling over in the head and shoulders.
What I liked about this was that it had a Darvis box. If you go from the 23rd of November out to the 11th of January, it had its Darvis box there, and then it broke down.
Yeah.
And it tried to retest the highs, and it only got midway.
Yeah, and we see Tesla doing a similar thing, by the way. So, like, zooming in on Tesla's chart, it looks like a flat base on the daily chart. But if you zoom in on Tesla, you see a similar pattern where early, I think it was at the same time frame, like in early January, it tried to make a new high and failed. And so that's just like a really negative sign, the way that these were failing.
Yeah. So that was, and it's just starting to roll over again, so that's what I liked about it.
Yeah, okay.
Big, huge gap right there that drops down to what, like 95, 97-ish?
Oh, right there, yeah. So the gap from in late November.
Right.
Yeah. All right. Well, that's a pretty cool trade idea. I want to look at ARK too. You follow Kathy Wood's ARK?
No.
So ARK is down. The ARK Innovation ETF, ARKK, is down almost 6% today. And think of this as a highly concentrated NASDAQ alternative. So, a lot of millennials use ARK as their substitute for the NASDAQ.
Okay.
And so if you look at the constituent list of it, let me just bring that up for everyone.
This has a massive negative divergence on it.
Yeah, and it's got a lot of exposure to Tesla. So the number one holding is Tesla. It's 10% of Kathy Wood's ARK Innovation Fund. Roku's number 2, CRISPR's number 3, Square's number 4, TDOC is number 5, Invitea is number 6, Zillow Group is number 7, Pure Storage, or PTSG, is number 8, Proto Labs is number 9, and Spotify is number 10. And out of she runs a bunch of different ETFs, but the ARK Innovation ETF is essentially a hybrid of the other ones, which are more narrow. So you can see them down here in the bottom right. There's the ARK Genomic Revolution ETF, ARK Next Generation Internet ETF, ARK FinTech Innovation ETF, and ARK Autonomous Technology and Robotics ETF. And so these are all subsets. The ARK Innovation ETF is kind of like a hybrid of all of them combined, and it's got the most liquidity and the biggest following. So ARKK is probably her, I would say it's her flagship fund. It's probably the best way I could put it. You should, and it has rebounded. Let me zoom out on the chart on this. I mean, it's up so much since the March low. The lows for March on this were around $33 a share, and it's at $143 right now. And this is like an alternative to the NASDAQ. So, I mean, this thing is on a screaming tear right now.
Oh, yeah, it's right to short.
Yeah, and, if I make this into a ratio chart with QQQ, then you could see that, it was basically moving very similar to QQQ in a tight range, and then after the March crash, everything she had, her portfolio was perfect for sort of the what was coming for the rest of 2020. And so, but now there's liquidity issues. She's even come out in recent interviews, I think. And she's making headlines for saying that we might get our portfolio might get hit based on the situation in the markets right now is making us vulnerable to getting hit. And so on a day where SPY is down less than 1%, I mean it was down quite a bit. SPY down less than 1%. QQQ, oops, key stuck there. QQQ down 2.5%, and ARK down 5.79%. So there was a Zero Hedge article over the weekend, and the headline was from Kathy Wood, a quote that says, "There will be fear." So. Yeah, there will be fear, and so really that's sort of like saying expect volatility, right? Blood in the streets, whatever. I mean, I don't really expect big problems for her unless Tesla gets out of hand. So if you look at the Roku chart, Roku looks fine to me. It actually looks great compared to Tesla. Does not look so good. So it's maybe has some support here at this previous resistance at 695, and we're kind of close to that. And so I mean, here's what I think. Here's kind of what I expect on this, Chris. Is I don't think we're going to get a waterfall decline from Tesla right now. I think it's likely to bounce at some point tomorrow. And probably move back up to this 21-day moving average, which is at 804. Probably move back up to, it's at 804 right now. By the end of the week, it's going to be lower, maybe around 790. And I think it's going to hit its head there, and that's probably where if we're going to see a real down move in Tesla. I expect it later, and not, like next week, not so much this week. So something we've talked about, I talk about it almost every day on the show, is junk bonds and TLT. And I've been watching this, and just look at TLT. This chart, going back to September, the chart for TLT, it's down like every single month. And I mean, it's at really nasty levels now. And so what we're seeing is dominoes, right? Where TLT is rolling over. And then that's bleeding into LQD, which is rolling over. That had a really nasty day today. And where it's going next is it's going HYG next. And now we're seeing HYG starting to look like Tesla looked like a week ago. And so I've got puts on HYG. That's where I think that is probably the cheapest downside protection that I could easily find that was liquid, was in HYG. And so I've got protection here. But mine is only until the March expiration. So probably like if I want more downside protection, I need to start buying it further out on the calendar. And it gets expensive to do that. But there may be an alternative. And so something that we've been talking about emerging trends, where we're running longer-term campaigns on, is in in some of the commodities areas like silver. These things exploded higher today. AG. I've been buying out of the money call options, 35 call options with a lot of duration on these, like out to 2022, early 2022. And it's these so AG is up like 3 times the amount that SLV and PSLV are up. So SLV is up 4%. First Majestic PSLV is the spot physical silver trust. So it's sort of like SLV. Yeah, so SLV is up 4%. PSLV also up 4%. But what I want to call out is the huge volume coming into PSLV. We've never seen anything like it before. So one of the differences with PSLV and SLV is that shareholders for PSLV can redeem their shares and get silver delivered to them. And so there are provisions in the prospectus so that small shareholders can do that. So think of it as a poor man's futures for silver. But here's the difference: they actually warehouse. I think they actually warehouse the silver. So whereas with futures, they may not. It's miners can sell silver futures and deliver the silver at when the contract reaches maturity. That's why it's futures, right? And so, but with PSLV, I think that for every share created, they already are warehousing the silver. Yeah. And so. What people are watching for is for PSLV to start to outpace SLV. And so if you look at the volume patterns on the chart between PSLV,
the only thing it's missing is a handle.
Well, you may not get it. If you zoom out, you'll see that this is the handle. So when I zoom out, see that? It had this like. Yeah, I zoomed out to a weekly, and you could see that that really kind of was the handle. It's breaking out from now. So anyway, where I'm going with this is the SLV. It moved up 4%, and a lot of these silver miners that I've been talking about on the show, they're up 12, 13%. So the 3 that I'm active in is Pan American Silver Corp, PAAS, Hecla Mining, which is it's a good stock, and then it's super liquid. HL for Hecla Mining, and then the other one is the one I'm most bullish on. My largest position is AG, which is First Majestic. I'm gonna zoom out and show a longer chart on this too.
I can't believe Paz made it all the way up to 40. AG.
Yeah, look at AG. So the options on this one that I'm buying, they were up 2 or 3 times more on a percentage basis than the stock. So they were up 20, 30, 40%. Some of these options, and when they're down, they're down big too. So my strategy here is buy at pivot points, but also buy on down days. So slowly accumulating these for a long-term campaign. And so, that kind of offset a lot of my losses from other things like pot stocks and things like that.
Are you doing leaps on these? I guess.
Well, they're not quite. So they've got a little less than a year. But yeah. And the idea is, I'm looking for that price to go up to near the 35 level for AG. I'm looking for that to happen in about a 3-month time frame. And so what that does is it puts my options at the money with about 6 months to go until expiration. And if it happens sooner, then I can roll in on the contract and take the extra money and use it to buy put protection. That's a little bit out of the money. So that's the idea there. So it was super interesting day. The other thing that I wanted to hit on during the show tonight is SPACS, but we don't have to jump to that yet.
What exactly is a SPAC?
So it's a special.
I need to get into the hype.
Yeah, I
still don't know what it is.
Yeah, I know, and that's why I wanted to talk about it because I think that. Like I had ignored it for the longest time because you hear people like Jeremy Grantham talking about like, well, it's not going to end well for some of these things. But they really remind me of the 1990s IPO mania. There's a SPAC mania now. It's like very similar. And so what they are, I think it stands for Special Purpose Acquisition Company. And what they do is they're essentially a shell company that gets formed. It's a pool of capital that you can invest in, and they essentially try to acquire usually they're private companies that they try to acquire. So it's a different way for private companies to go public is to get acquired by a SPAC. And so think about it like if you have the IPO first, and then they pick the company that they're bringing public. So they're super speculative, right? And you have to do a little digging on each one of these to figure out what even their targets are that they're interested in. And it can change. Sometimes these deals fall apart. But the big one right now that's hot in the news is CCIV. And I got in this one. I first saw it on a most actives list right here in like the mid-20s. And I ended up getting in on a breakout above 36 is where I got in. So I got in this one kind of late, but it's still up for me. But I mean, it may not stay up. But I mean, just look at that chart. It looks insanely strong. So when I see charts like this, it makes me pay attention. So
I mean, you're near 100 ROI.
No. I got in as it was breaking out above this 36. So it's probably like maybe a 50% return, something like that right now. But they do have options, and what I'm in is the options. But I've got protective puts that give a slight drag. So my return is about what. Oh yeah, I know. Yeah, it's crazy. So I want to show people a way I figured out to look at these SPACs. And so if you want to look at all the SPACs pretty easily, I'll show you how to do that. So if you come in here on the FinViz screener. And you select industry, the industry filter, and then you pick shell companies. So give me a moment to find shell companies on here.
I didn't know FinViz had that.
Yeah, I didn't know that either. So I just found this out this weekend, and I was going to do a show about it this weekend, but I got busy with other things this weekend, and so I didn't. But and I've got these sorted by market cap right now. You can see DKNG is a shell company. It's number one. That's not a SPAC. It may have been originally. I don't know. So let's kind of gloss over that one. But let me flip to the charts on these, and you can see there's CCIV. It's number 2 on the list. This one, Pershing Square Holdings. This is Bill Ackman's SPAC. And so you could see there's a lot of SPACs here. IPOF, IPOE. I just took a position in IPOE today. A really small starter position. I don't know if I'll continue with it or not. I'm also in BFT, which is fully Trans-Marine Acquisition Corp. What this one seems to have as their target is a company called PaySafe. Which I don't know if it's like a PayPal substitute or something like that. But I mean, that to me is kind of interesting. So when I sort these by market cap, it's probably I should be taking a look at this Pershing Square one too. I'm most interested in the ones with the biggest market cap, and they're showing huge momentum. So.
And they're optionable?
A lot of them, yes. I mean, just look at this chart. GSAH looks insane. It looks awesome.
SBE in that flag.
Which one? SBE. Where? Oh, SBE. Yeah. So I'm not sure if this one's a SPAC or not. Oh yeah, it is. It says it's an acquisition corporation. And so a lot of these companies have already picked a target. So anyway, here's why we need to be paying attention to these, because look at the price movement we're getting from these. These are some of the best stock charts that I've seen. They're just some of them are making furious up moves. And there's a few of them that are basing. And like you said, there's a bull flag here on SBE. And GSAH may find some support here at some point, or may just continue ripping. And so anyway, we can go through the pages of these. There's a bunch of them. I don't know that we need to go through them all, but the point is, I wanted to show people how they can easily find these and look through the list. And then another thing that I found helpful is going over to Seeking Alpha. Seeking Alpha is a good place to go when you want to get the stories.
Yes, I do that often.
I don't know why I'm on that back to.
I don't know why, but I'm always on the opposite side of the analysts over at Options Alpha, or not Options Alpha.
Seeking Alpha? Yeah. So, like, if we go to let's look at Bill Ackman's SPAC. PSTH. So if I type that in here, PSTH, you can kind of get the backstory about this, like even just from the headlines. Like Bill Ackman's SPAC rallies some 12% to intraday record as M&A speculation grows. So also right here, dips as Bill Ackman offers no news on target. So people don't know what the target of this one is. Another thing you can do is see how there's 111 comments on this story. You can easily come in there and people will put research in these comments sometimes. So that's another helpful way to maybe get a little bit of insight. People will do their put their due diligence in comments on here. So let's look at CCIV. And of course, you can. Yeah. That guy, man. I mean, he's worth paying attention to.
Oh, speaking of, man, did you see HLF?
Oh yeah, it was down again, right? Let's look at that.
It looks like a nightmare in real time.
Yeah, so for people who might have missed it, Chris came on the show last week and was talking about Herbalife. And which, by the way, was a Bill Ackman short from back in the day. I don't think he's still shorted, but that was. Yeah, I'm pretty sure that was one of his episodes. Was shorting Herbalife. So yeah, it looks ugly. It looks really ugly. It's back now down testing the low from this base after what is at this point in hindsight a false breakout. So Chris called it. Almost to the day. I think at the top, or it was within a day or two, right? Yeah, you came on the show before this gap down, and you were talking about that. You gapped down and ripped lower, and then it's just been going down. So great call on that, Chris.
Thank you.
And
EXAS, and there was another one that I was looking at.
Yeah. So this one's still kind of consolidating. Exact Sciences.
Yeah, it's hesitating. But it's going to go the same way.
You think so? Yeah. So. By the way, just to replay some of the analysis from back then, is Chris was calling out divergences in MACD and RSI. I'm looking at the weekly on EXAS. And you can see that the MACD is now come together. It's about to roll over. And if you look on the daily, I think it's already rolled over. So some of those things like that, some of these technical factors, Chris was calling out. Yeah, you could see the MACD already rolled over on the daily. And the weekly, we can expect probably to follow. It looks like it did have a spike down that could give some support, but nevertheless, it's a good one to watch.
So yeah, it was HLF, it was a bear on EXAS, I was a bull on CRSR, I was a bull on NKTR, I was a bull on
and CRSR, it's hanging in there, right around when we were talking about it. It found support at that lower level. I'm not in it right now. I got out of it because there's no reason. If it's not ready to break out of the base, then there's no reason for me to sit in it. I can easily wait on it and get in later.
Right. The other one was GSK. I was there.
GSK. GlaxoSmithKline. Okay, and we were talking about it. I think it was right here on the 17th. That's when we had the show. It was right there. So here's like 3 bars later. I think it was like last Wednesday or something. Last Wednesday evening.
I believe so. I was in it since Monday of last week. Yeah, there it is. I was waiting for it to break I have a trend line. I don't know if you have a trend line there, but I have one on it. There's a 3-point trend line from April going all the way out to now. And it finally broke that trend line. So I may get back into that now that it's broken.
On the long side.
No, I'm going to short.
On the short side. Okay, so shorting a breakdown.
I'm still shorting that.
Okay. Yeah, I just wanted to clarify.
Which I don't see one.
Yeah, no, they're red. We should talk about volatility a little bit. I don't know if people follow Samantha DeLuke on here, but she's got a fantastic YouTube channel. She's got some premium services also, but I've been following her on Twitter for years, and she's been talking about going into a turbulent time in the next few weeks. And if you look at what happened with Tesla and the NASDAQ today, this is kind of what she's been calling out. And I don't know that it's necessarily come into the volatility products yet, but this can easily turn. So I try to watch VXX and the VIX futures every day. So looking at VIX Central, for example, VIXCentral.com, looking at the term structure on the VIX futures. So right now, it's still in contango, and so that's going to put a downward pressure on VXX. And so to see it kind of starting to turn here, it could explode higher. We've seen some explosive stuff recently, some fireworks come out of it, but this was just kind of a shakeout. We may be starting to see bigger moves come in the market for a few reasons. One is the whole Tesla and Bitcoin thing. If GameStop and some of these other short squeezers rip higher, and so These could be drivers for higher implied volatility. One thing keeping implied volatility down right now is the volatility coming out of call options. Because so much of that has been pent up in call options, and we just had options expiration on Friday for the February monthlies. And so all that volatility coming out of it has kind of kept the implied volatility low. But now that we're heading into what could be a down month, this could start to rip higher maybe, and we could expect if that happens that the spot VIX future or the spot VIX rise above the short-dated VIX futures contract. So that'll be something I'll be watching for over the next few weeks. And the way I'm playing it, I'm not buying the volatility itself because it's still pretty expensive. I'm buying HYG puts.
Nice.
Yeah. So we should probably talk about. We should talk about my short squeeze theory. I haven't talked about this since the very first episode of going live. So I came out and I broke some news on the very first show that I had made some discoveries in my research about the GameStop short squeeze, which had just kind of reached the hundreds of dollars price at that time, and I think it had just started to fade back from that. And what I had discovered was that GameStop was very likely the second short squeeze in a series of campaigns. And so let's revisit this because it's been a few weeks now. Let me flip over to GME. And I want to take people through the research that I found. So GME was a very heavily shorted stock. And somebody, here's what put me on the right path on this. Someone posted in a Reddit thread on Wall Street Bets that the failure to deliver for GameStop was a super outlier, crazy high percentage compared to any other stock. And so what that reminded me of is the whole naked shorting saga with Overstock.com. And so I went and looked at Overstock.com, which is not OSK, it's OSTK. And Overstock.com, by the way, reports earnings this week. I remember seeing that somewhere. And take a look at this. I was stunned by what I found when I started digging around on this. Look at this low in March. Are you seeing this? $2.53 low on Overstock.com in March 2020. And it ran almost straight up week after week after week. To $128. Now, here's where the story gets interesting.
Wow.
Is if you put these on the same chart, what you'll see is that Overstock.com short squeeze, it comes to an end right around the time that GameStop short squeeze begins. So keep these dates in mind. March to August. That's when Overstock.com shares rose like what is this, like a 50-fold rise. Okay. Now let's move to the next short squeeze target, GME. And what you'll find is GME was basing. It was basing all the way until August, and look, that's when it starts to rise. From a low in August of around $4 a share, all the way up to the high of $483 a share, a 100-fold rise. Now, there's so much more to this story. Okay, because I started digging into insider sales in Overstock.com shares. And what I found out is they coincide with big price moves in GameStop. And so what people need to know is that Patrick Byrne is the former CEO of Overstock.com. He's still connected with those same people. In fact, one might consider the possibility that they have pooled money together. Perhaps it's one operator. Perhaps it's some of the same people managing their money or the same financial advisors. I'm not sure. But my point is there are some overlaps there that certainly make me pay attention. Now, there's more that people need to know. Is that Patrick Byrne, where have we seen him in the news lately? As part of the inner circle of former President Trump. So some of the insiders in Patrick Byrne's circle include perhaps some of the most influential people in Trump's circles. And this would include, or it could include one of the billionaires that works for Renaissance Technologies. What was that guy's name? Slipping my mind right now. Not the main guy. Simon. I'm not talking about the main guy. Simon. But anyway, people can research all these links. So I laid it all out in my very first live stream. I laid all this out. And so I'm not going to dig into all these details here. If people want to go back and watch that first episode, then they can see all those dots that I connect. But here's the point: if this is a rolling bubble of short squeezes, which by the way, this one on GameStop just about brought the market to its knees. We saw a huge spike in VIX that lines up with the GameStop move. So let me show that on the calendar here on a chart. I'm going to show this GameStop spike in late January coincides with this big spike in VXX at the end of January. And so this had a destabilizing effect. Now, what I'm suggesting is that those same operators who are not the Wall Street Bets crowd, okay? I don't think they're the ones that are really making the short squeeze happen. And one thing I'll give evidence of is that guy, Deep Fucking Value, he bought all his stuff pretty much at the beginning, and he hasn't made much incremental purchases since. In fact, he sold $13 million worth of stock and or options along the way, and he has since bought back some of it. But his incremental buying has not been what's been pushing it higher. So what I'm suggesting is that it is people who knew what they were doing from Overstock, who were involved in these were the operators involved on the GameStop short squeeze, and that this is a rolling series of campaigns of short squeezes, ultimately leading to the biggest one of all, silver. Naked short selling of silver is a big problem. It's been documented. There are huge investment banks that are on the wrong side. They've sold. I don't think it's a secret that there are up to maybe 100 ounces of silver sold, paper silver sold for each 1 ounce of warehouse real silver. And so the biggest short squeeze of all is going to be silver. And I brought up SLV, but let's actually look at dollar sign silver. This is a silver futures. And believe me, nobody knows about naked short selling and fighting against that more than Patrick Byrne and his colleagues, because they've had a lawsuit going for almost a decade against big banks, including Goldman Sachs, about naked shorting in Overstock.com shares. And so what I'm suggesting is that when these same people who now have pockets, I think deep enough, I think that they've amassed enough of a war chest to finally pull off. The biggest short squeeze probably ever. It's silver. I think it's starting now. I think that I mean, there may even be militaries involved. For all I know. I think that these people may be that connected. So
it's funny you say that. I just put my silver up a week ago, 10 days ago, for $500 an ounce.
probably 500 an ounce, or 500 for a 10 ounce.
500 for a 10 ounce. I mean, 500 for a 10 ounce.
Yeah.
Sorry,
Yeah.
not 500 an ounce.
Yeah, I got you. It probably was gobbled up.
Probably was gobbled up.
No, not yet.
Not yet.
Not yet.
Well, I mean, it may happen.
It may happen.
Yeah, and I still have a lot to go, and I'm just slowly getting rid of it.
So
I do believe your direction is right.
yeah, if there's any merit to this narrative, then I think I've stumbled onto the very best way to participate, which is not necessarily buying PSLV, but instead buying these what are pretty deep out of the money options with a lot of time on them. That are they've got enough time for this to really get going.
Have you seen any open interest peaks?
You know, I haven't really taken a deep look at the open interest on it, other than to say that I can tell you that they're fairly liquid on the miners that I'm looking at. So a couple other things to talk about that are worth looking into. SIL is a silver miner ETF. Oh, hang on. This didn't bring it up. SIL. Yeah. Silver miner ETF. You look at their holdings. And it's going to show you. I've looked at this on the show before. Wheaton Precious Metals Corp. There is a U.S. listed WPM also. So anyway, here's a list of some of the big silver miners. You see in here, First Majestic, which is AG, is the U.S. listed name. Hecla Mining is right here. This is the U.S. listing, HL. Pan America Silver, PAAS. So this is a good place to get that list. I chose not to go with ETF for a reason. I've gone into this on previous broadcasts before. That if the silver squeeze really gets underway, it could be so destabilizing to the financial system that any kind of assets in a paper account, the very safest way to keep those would be shares in a cash account. And so, if you have an ETF, then that ETF is a custodian for the holdings in that ETF. I don't want that middleman there. It could be that destabilizing. And so my plan is, with these deep out of the money options on the silver miners, that ultimately, my plan is to exercise those options and take possession of the shares and possibly even move them into a cash account. And if I get scared enough, then I may actually sell those mining shares and try to maybe go into PSLV and take delivery of roll those shares into PSLV and try and take delivery of silver or something like that. Somehow try to get physical silver if I think it becomes that destabilized the system. But that's the kind of thing we're talking about, where we see these bond yields, where it's falling right now, and it's kind of controlled. It's not an uncontrolled drop on TLT and some of these long-term bonds yet. But if we start seeing these things approaching zero, with the prospect of turning negative, and there's a lot that's been written about that, the possibility for negative yields on some of these long-term bonds for U.S. government bonds. There was an article out recently about some of the new liquidity may run into caps on deposits for some of the term deposit facilities that the Federal Reserve has. And I wasn't even aware of these caps. But this guy, I think he's a Credit Suisse banker, Zoltan Pozar, a couple weeks ago, or maybe it was a week ago, put out an article about this, saying that money that can't go into those overnight facilities, the RRP overnight facilities, money that can't go into there. It's going to seek out other places to park, basically, and that it may find its way into negative yielding assets. So crazy stuff. What's your take, man? What do you think, Chris?
the first thing that flipped across my brain was, is this the beginning of another '08? With all this discussion that we've been having.
Yeah, and you know what? It really is the same problems they tried to solve in '08. They essentially run out of runway with the solutions they put in place. So, yeah, you're looking in the right direction with this. Go ahead.
The forbearance forgiveness is going to come to an end. It has to, especially if they're opening up schools and they're trying to open up restaurants and so on and so forth. You can't have the sword and the shield at the same time. So if they open up the economy too soon, barring the pandemic reasons, but if they open up the economy too soon because people don't have any money, then these people are going to go into default. And if they don't have any relief from default, that's it. The house of cards crumbles again.
Yeah, that's a really good point. There's kind of a black hole out there, and the question is, as we approach it, do we get pulled into the black hole? And that is people who haven't put their lives back together, or their income situation has changed since March for whatever reason, and if they're unable to essentially pay the bill when the bill comes due. And with forbearance, the bill just keeps stacking up. I think, right? It's not like they don't have to pay. It's like they have to pay more at the end.
Right, it's not forgiven.
So you had a 30-year loan, now it's a 31-year loan.
Exactly. And that's assuming that your mortgage is written that way. If your mortgage isn't written that way, or it doesn't provide that relief, well then once the government assistance or relief is done, that's it. You're due and payable now.
Wow. Yeah, well, that could make some interesting issues with banking and the housing market. The banks are strong right now because the yield curve is steep. The bank business model is borrow short and lend long. What that means is like borrow at short-term interest rates and lend it out at long-term interest rates. And the traditional way that happened was, a community would make deposits into the community's bank, and then if businesses or individuals wanted to take a loan for buying a house or a business loan or whatever, then the bank could essentially use the deposit money and lend that out, and they would lend out more than what was there because depositors aren't going to come for it all at once. And so that allowed them. What's that?
Is the fractional share?
Yeah, well, it changed. It changed over time. There's a reserve requirement ratio that changes. Sometimes it's 10-1, sometimes it's 30-1. It's a variable. It's a variable. So what could happen though is if depositors came for the cash, then it could essentially collapse that bank, because if the bank hasn't lent out, then they can't give it to the depositors. And so that's why we see the banking system that we have today, which is let's cushion all these regional banks by stitching them together, so that if some region experiences a problem, I don't know, like in Texas with the power outages or whatever that just happened, if people went and did a run on the banks there, well, the banking system of the entire country or the entire world could help absorb that regional shock. And so that's how it's been. They try to make it more resilient in that way. The problem is it makes a too big to fail scenario where when there's a real problem, it's a big problem. Like Lehman Brothers and Bear Stearns. Where are those soft spots in the banking system right now? That's probably a topic for a show tomorrow or the day after. I mean, we should probably do some digging. One thing I'll mention is the banks that got hurt in 07 and 08, they were already trending lower for a long time. And just because the yield curve is wide right now doesn't mean that that all the banks are healthy. I mean, the stage is set. For problems in the banking system. So I love where you're going with this. You're hitting on all these important points.
Right. Well, they're healthy because we haven't gotten to that point yet. You know, that breaking point where we're not at the levy. We're approaching it. And when we hit it, or when it gets hit, is going to decide. You know, pretty much Biden is going to decide whether these banks or mortgage houses, depending on who's holding them right now, are going to fail or not. If he makes policy that is consumer relief based, then they could kick that can down the road. But if he doesn't, like he's holding up this $1,400 check or whatever it is, because people start to say, "Well, where's my check? Where's my money? You said you were going to give me money. Where is it?"
Right. And then if he says, "Hey, I gave you the relief. I gave you the check, right? Like that's good enough or something." That could be a problem. That could be a problem.
And I'm not saying it's going to be around the corner. We're still going to have time to talk about this. But
well, what people need.
is not out of the realm of possibilities any longer.
Yeah, you're absolutely right. And you're absolutely right. What people need isn't a check from the government or a handout. What people need is economic opportunity. They need opportunity for jobs. And so, is that the direction they're going? That doesn't really look like it. I mean, the government response to this so far has been about as bad as you could expect. I mean, I never thought that we would see anything like what we're seeing with this government response. It's horrific. It's horrific. It's about as destructive as they could be.
Trump had a good idea, but his way of communicating and implementing it was horrendous.
Yeah, I mean, I think once it became about the coronavirus and dealing with all of that, there's a subset of the administration and arm that kind of took over handling the policy for that part of things. And so, like we see this guy, Dr. Fauci or whatever, and I mean, I don't think he's an economist. What he specializes. Yeah, exactly. So, yet we've got guys like this making economic policy. So when I say what people need is economic opportunity, they need a chance to go out there and work on meaningful jobs, not taking dirt from one pile, moving it to another pile, or the government's going to give us back some of the money that they taxed us for. This is not good stuff. I mean, not at all. No, not at all. Yeah. So I guess I had COVID. I got sick. Unfortunately, my mom passed from it. Oh man, really sorry to hear that.
The whole house got sick. We all got COVID, and I'm dealing with the after effects of it. My breathing isn't the best that it could be all the time. Like my pulse ox over the weekend got down to 89. That sucks. That's really bad. But I'm still here.
Yeah.
The main thing that people need to realize is if you're going to survive this economy, you got to get your ass out there and get a job. Now, depending on your local government, that may not be feasible, but just giving somebody a $1,400 check or a $2,000 check is definitely not going to pay the bills. Not after 6-7 months of this,
right? Yeah, exactly. It's not even like a substitute for that. So the other thing about it is the health department coming out there using what it feels like to me a one-size-fits-all policy about, let's just put a sign on front of all these stores that says you got to wear a mask to come in, or else we're going to shut the store down or fine them or whatever, and keeping people spread apart and stuff. Like it's it's not. It's to use that as a one size fits all policy. Just doesn't feel right to me. There's something off about it. There's something off about it. So yeah, and these policies are still in place. That's something else that is a factor. I don't know when we can expect for some of these policies to get rolled back, but I don't know about you, Chris, but I don't feel like going out and dining in a restaurant if I have to wear a mask to go to check in at the restaurant. If I have to wear the mask to the table and then I can take it off while I eat. I mean, it's just or I can't. I can't essentially go socialize while I'm out. Or I have to talk through a mask. It just makes me not want to go out and do those things. If I have to wear a mask for 2 hours in a movie theater, I just don't. I'd rather just stay home. So these policies. I don't know that it's going to get better anytime soon. I don't know that. How bad is the COVID problem everywhere? I don't know. I don't know. It's so hard to measure, but we're seeing these applied on a one size fits all kind of a policy. So.
Yeah, obviously.
Yeah.
I got it.
Yeah.
I
got real sick too. When I got real sick, it happened It happened before when they said that the COVID came from China. When I got sick from it, it was right after Halloween. In 2019. So our neighborhood is like a big Halloween neighborhood. Like everyone was out. 2019. I got it right after Halloween. And so what I'm telling you is I had been in contact with like hundreds of people on Halloween. And I got so sick in November. It was one of the worst times I'd ever been sick. And it wasn't just me. Micah also got it. I'm not saying it was COVID, but it had all the symptoms like they described. So, it's the time. Only the timeline was off. So the point is, like, I did get really sick from something. So what was that? Was that COVID? I don't know. Was that COVID? I don't know. Yeah, and by the way, I don't know if you remember at that time. They were saying that people were dying from vaping. Remember that?
I thought that was in the summer, but yes, I do remember that.
Yeah, exactly. Yeah, it was in 2019. They were saying, we just found out that like vaping is so bad for you, and people are dying from it. But that whole thing has disappeared, and now all we hear about is COVID deaths. So my explanation for it is actually that COVID was here long before what we've been told. That's my guess. I mean, I don't know what's going on with that. But what I can tell you is the health department out there having everything shut down is bad for the economy. And so things like having a really wide yield curve, there's good and there's bad about that. Yeah, it's making the bank's share prices go up for now, but it's setting the stage down the road for problems. And so, when does that kick in? I don't know, but we have to keep an eye on it now. And so the system is vulnerable to shocks.
And it's setting itself up to fail. Because of the extremes that it's going.
Yeah. Well, this is a really great discussion.
Have you looked at the trees lately? The bond buying by the Federal Reserve?
No. Talk me through it.
It's a vertical line, straight up.
Is it? Is there a Fred data series for that we can bring up?
Yeah, it should be. If you go to Fred, it's TREAST, I think.
Okay, yeah, hang on. Let me try and bring it up. I got a Fred window here. TR what?
EAST.
Securities held outright, U.S. Treasury, all. Let's take a look at this. Okay.
That should be it.
Yeah, maybe this is the series you're talking about. Yeah, boy, hockey stick. That's interesting.
It's ridiculous.
Yeah, and you know what else is interesting about this is I remember back in the in February, in late February, before the crash really got underway, I said they're going to be looking at this part of the chart and they're going to shade it with the recession color. And now looking back at the chart, like there it is, like this is a recession color.
I don't see it yet on your.
Oh yeah, it'll catch up here in just a minute.
Yeah, I don't get it on my iPad. I get it on my Thinkorswim desktop, but I don't get it on.
Yeah,
my iPad.
there's an issue with discoloration on here with the. I use OBS to do this stream, and so I don't know if people can see that yellow stripe there, but if people go look at this for themselves, they'll see that the recession color is there. It's in fact it's still there right now. So according to this,
it's straight up.
yeah, and you know what else is bad though is the money velocity. Like it's velocity of.
Oh, it's like somebody dropped it off a cliff.
Yeah, exactly. Look at that. I mean, this stuff is super important. So when this picks up,
I'm waiting for it.
Yeah,
are you looking at M2 or M1?
I went into M2.
I'm still waiting.
So when this does pick back up, I mean, it's going to be like the wrath of God inflation. I mean, it could get crazy, or it could just keep falling. I mean, I don't know. But when it's falling, you've got stagflation risk, and when it's rising, then that's when price inflation could be a problem. However, I will say this: like silver can squeeze either way. You don't need to have the velocity of money going up for silver to squeeze. And so, I mean, look, it was falling from 2005 to 2011. We had a huge bull market in gold and silver during that time. So, you know, don't wait. I'm not waiting around for the velocity, the money velocity to rise before I say, okay, now it's time to get into silver.
Right.
I'm already accumulating. I've talked about it, you know, the tactics I've got for that on here many times. But, and, you know, we'll keep going over it because it's a dynamic situation and you've got to be flexible. But the point
right
is...
now I'm waiting for it to get back in stock.
What's that?
Silver.
Oh.
I can't find it.
Yeah, I listened to a great podcast about that this weekend. There's somebody on Twitter I follow for precious metals. Let me see if I can actually find the tweet I sent out about this. And let's point people to this video. It's worth watching. It's a great panel interview with. I can't believe the cast on this. It was with Arcadia Economic. Yeah, here we go. This is it. I'll bring the tweet up and show it on screen here. So this is from Galactic_Trader on Twitter. He says, great call-outs by the panel on @Arcadia Economic tonight. The video starts near the end when they mention r/Wall Street Silver. Thanks, Chris, Andy, Yara, and @Lawrence Leopard. I love following this guy, Lawrence Leopard. He is an amazing miners trader, and I've been following him for years. So I was really excited to see him on the panel. I'd love to have him as a guest on this show. Let's see here. So anyway, yeah, this panel right here, people can go to my Twitter and they can find this tweet from yesterday. I retweeted this.
I'm heading there. I'm looking for it.
Yeah, and the video's on YouTube. Is the paper silver market starting to unravel? That's the name of their YouTube video. And I didn't make it all the way through the interview yet because it's like an hour and a half long. But amazing content. And what these guys are saying is they're saying they've never seen the physical market this tight. And I've been around for, you know, I've been doing physical metals trading for like a decade or maybe more. And, you know, I was in a coin shop during the 2011 silver market top. On that very weekend, I was in a metal store and I saw a guy come in with a giant briefcase full of silver. And I think what he was doing was trading it for gold. It was either that or he was cashing out. That dude sold the exact top. He was a genius.
That's right. You were talking about the gold-silver ratio 2 episodes ago, I believe it was.
Yeah. So anyway, these guys have been trading that physical market for longer than me. A lot of the people on this panel. In fact, I think they had the founder of GATA on the panel as well. So it's super interesting. I need to go back and finish this interview.
Okay, I am looking for...
Why am I not following Arcadia Economic? That's a follow.
I see the silver squeeze, but I do not see Arcadia yet.
So, yeah, the gentleman that was moderating it was this guy Arcadia Economic, and he did a really great job moderating that panel. He He had some questions that I wouldn't spend quite as much time on.
Okay, I found it.
But fantastic video. I couldn't believe it. It made my weekend seeing that. Oh, by the way, a couple of videos coming up that people should watch out for is Samantha DeLuke. Here, let me highlight her real quick. I'm sorry, I said it wrong. Samantha LeDuc. She's got some shows coming up that I really am looking forward to. She's got, let's highlight this, Rates Matter more than anything right now. This is from Samantha. Given we are in an economy of debt, higher real yields are causing concern as the inflation supercycle narrative starts to spread. Jonathan and I will discuss and debate Tuesday at the close. So I can't wait to see this video. I'm not going to miss it. I really recommend this. I'm going to hit like on it right now. So this guy that she's interviewing, this guy Jonathan, he's really good. So, I mean, I like his comments a lot, too. I started following him. I didn't know about him until Samantha LeDuc interviewed him.
I like Samantha LeDuc. I've seen some of her stuff, and she's recently been in my Twitter lately.
Yeah, so I'm gonna retweet this out for everyone. So if you come to my Twitter, at John Tate on Twitter, you can that's JONTAIT. You can find her link there. So yeah, I'm definitely going to catch this. And she's got another one, Macro to Micro. She does every Thursday too. I think she's got an interesting one planned on Thursday. Let's see if we can find that. Oh yeah, SPAC attack. So we talked about SPACs earlier in this show. I imagine that she's going to be talking about a little different. So she's bringing on some experts about this, and they're also going to be looking at, is there any opportunity to short any of these SPACs? So I'll retweet that one as well. So yeah, this is going to be a really good show too. And so maybe the research details we gave out earlier tonight will help people prepare for that, because they'll be able to go out there and look through the list of SPACs in a really concentrated way. And we also showed a way to get the backstory on those by going into Seeking Alpha. So I mean, there's other ways too, but I just highlighted a few things. So yeah.
I am very excited for the next couple of weeks to come.
Yeah, there's a lot going on. I already kind of laid out my guess about what's going to happen with Tesla. It had a huge move on a percentage basis today. I mean, when do you see that stock go up or down almost 10% in a day? And today it was down 8.55%. So that's one of the bigger moves that it makes. I mean, it's high volatility. It can do that kind of stuff, but I mean, Tesla used to not be correlated to the market. It was like, it was interesting as like a pairs trader because, or a portfolio builder, you could add Tesla to your portfolio without really adding a lot of market risk. But that's not the case now. It's in the S&P 500 index. It's in the QQQ, the NASDAQ 100 index. It's in ARK. I mean, it's everywhere. The market cap is so big. It's the 8th biggest company or 7th if you don't count Google twice.
Yeah, I am still kicking myself in the ass for not getting in at 250 the second time that it went down.
Yeah, but I mean, you're not going to catch everything, right?
Yeah, well, that was a.
And is this just a shakeout? Is this going to be another opportunity? We'll see. You know, it could have some new tailwinds that it didn't have before. Like now, it's got Bitcoin exposure. So if Bitcoin, here, let's go take a look on FinViz. We'll look at the crypto tab here. So Bitcoin's bounced back a lot. It's showing 53,954. Ripple's actually green today.
It's got the decreasing volume with this whole rise. As the volume's decreasing and as it's rising, I'm looking at Tesla, by the way. The only thing I would do here is short it. I don't know that I would see this as a discount.
And so at this point, Tesla, in a way, it's like a proxy for Bitcoin. It's really put itself at the center of a lot of things. But look, it gapped down. It opened below the 50-day moving average, which is 769. And the open today was Yeah, the open was 762. And the high, look at that. It got as high as 768, which was right under that. It went right up that 50-day moving average. I mean, just barely. I mean, and that's now resistance. So my point is, I think it's going to rally up to there. It may get above it a little bit, but in the short term, that's just my short-term guess. But I mean, as long as it's stuck underneath this moving averages, I'm not trying to get caught off sides on it, so I'm not going in long in a big way. Maybe just in a small way. But if we do see a rally like that, it may be a shorting opportunity before it really flies off.
I guess a lot is going to depend on this week and mostly tomorrow because it is at an inflection point right here.
Right. It looks oversold to a lot of people, but guess what? Like the Friday before Black Monday in 1987, that looked oversold to a lot of people. If you go back and read Marty Schwartz's book, Pitbull, he said, I came into Black Monday 1987, October 19th. I came into that market long S&P because on Friday it looked like capitulation. It looked oversold. And he's got a really amazing story about what happened the rest of that week in there. But, that is the situation for Tesla right now. It looks maybe a little bit oversold. And
I was actually looking at what was once resistance is now support.
You mean what was once support is now resistance? Or the other way around? Oh.
No, the other way around.
Okay, so
looking at 698.50 as a temporary or a possible support that was once resistance, not back middle of December 2020. With massive volume on one of those days, by the way.
Yep, I see it. And so, I agree. I think it's probably going to catch a bounce there tomorrow if it even goes that low for the rest of the week. I think probably tomorrow maybe it flushes at that down to that level and then turns around and goes higher the rest of the week. That's my guess. Because I'm just not seeing quite enough pressure yet in things like the volatility product complex, and with high yield bonds, the pressure's not there yet. So I mean, right now it's just tech trading down in a vacuum is what it looks like to me.
What if it pulls when it goes? I can't think of the name right now. When it goes from one area to another area, like everybody runs out of the queues and they go into the SPY.
Oh, rotation?
Yeah, thank you. Rotation.
Yeah, well, we are seeing that. Like, I've been calling it out for weeks. Like, what are the emerging trends? Well, it's not GameStop. It's not Riot. It's not the blockchain stuff. These things have all been running. Same with the pot stocks. These are not the emerging trends. The emerging trends that we've covered on this show is like Jets. Okay, Jets is just now breaking out. And you can see that it is actually up today. In fact, it's. I started covering it, I think, right here almost a week ago when it cleared above this 24 level. I said, look, it's likely to keep running. We even see it with CCL, Carnival. And I know they had some. Yeah, they had some news where they're issuing. They're writing a new bond for $1 billion or something. Came out in after hours. The point is, it's still up a lot, and this is breaking out. What else is breaking out? Silver, the silver miners, right? In fact, I call it out. Let's take a long-term view on this. I call it out like silver is looking stronger than gold. We've looked at the.
Are you typing SIL?
Yeah, SIL. Yeah, and if we look at the gold to silver ratio. It's falling. That's strong for the metals market. This is a good thing. And the silver charts are holding up. The silver miners, silver itself, like it looks like a really strong base. As for gold looks weaker. But I think maybe that could be because it's easier to play with paper gold now than it is to play with paper silver for some of the big institutions that are moving these futures prices around. So I mean, maybe that they've got more room to play with the gold price with regards to the warehouse situation than it is for silver. So one of these guys, I don't remember who it was, he said that the situation we saw with palladium, palladium has made
a run up of 2019.
Oh, it's been running for years. Look at this. I mean, in fact, if I can zoom out more, you'll see how this has been running for a long time.
What is it? PL, right?
$ PALL, or there's also a ETF for it, PALL.
PALL, just do that.
Yeah, and so, by the way, I know a guy who loaded the boat right here at the bottom in 2009. He actually works, or used to work, I don't know if he still does, at one of the coin shops around. He switched a lot of his metals into palladium at the bottom. I don't know if he still has it all, but if he does, man, I mean, you want to talk about wealth.
Wow.
That guy was a genius. He's a brilliant guy, too. I always love talking with him. I'm not going to give his name out on the show, but I mean, maybe we could get him to come on the show sometime. That would be fun.
Oh, wow, the weekly looks like a spring in PALL.
Yeah, it's making like a cup and handle right now kind of pattern, you know?
I see a spring.
A spring?
Yeah, like a reverse a loudspeaker or whatever you call that, megaphone.
Oh, yeah, exactly. It looks like it wants to run higher.
Yeah.
So, I mean, it had that big shakeout in March, and it just, like, shook it right off. And it's not running like copper is over the last year.
It's cheap. I don't know what was up with copper. I couldn't figure that out for the life of me.
So one of the things they're talking about is the electrification of everything, including like electric cars and things like that. So a big demand for copper there.
But what was the excuse back in 2009 when it went up to $5, almost $5 or?
Yeah, I'm not sure, but I mean, this is one of the monster runs that Freeport McMoran has had. But this is not an emerging trend. FCX, yeah, that's Freeport. So this is not an emerging trend, though. Like, this is a trend that's been well underway for a year. And so I'm trying to concentrate on emerging trends right now. And right now it's with, like, jets, it's with Carnival, and some of those entertainment things. And it's with the silver and the miners. Another one is uranium. So Cameco, look at this on the monthly. It's breaking out. This is a major long-term breakout.
Help me out with uranium. What am I looking at?
So the URA is one of the ETFs for it, and Cameco is CCJ. Cameco CCJ, and that is the most liquid options market that I've found. So my trades are in CCJ. I'm accumulating some long-term out-of-the-money options in this, with the thinking that this could turn into a multi-year bull run, sort of like what happened from 2000 to 2007. And where uranium went off the rails was when the Fukushima thing happened in 2011. That marked kind of a major top in uranium, and it's I think.
Just had another earthquake over there.
Oh yeah. Well,
yeah, like not 2-3 weeks ago.
It looks to me like nothing's going to stop this bull run. We see the volume coming in. This thing is turning around. It looks.
I'm looking at the weekly right
now. It looks like a long-term, strong play. So this to me, this is what I'm talking about when I talk about emerging trends. And yeah, I know it was like $5.27 back in March, but I mean it just flashed down there. Like this is a major breakout going on starting in 2021.
What you're going to do at this point is look left and see where your S&Rs are to decide when you're going to get in and when you're going to close.
Yeah, I mean there are some levels on here for sure. Like there's a major level around 30, and there's another major level around 40. That are going to be resistance levels for this thing. So, I expect it's probably going to have the bases along the way. In order for Cameco to hit new highs, it's got to get above 47. And it could. I don't know. I mean, I don't know how long it's going to take for this. It's sometimes these things run fast, sometimes they don't. But, my point is I'm trying to buy options that I think are going to take 3 to 6 months to get to at the money. At this point, with these long-term plays, and I want there to still be 3 to 6 months of life left on it when my options are at the money, because that gives me a lot of flexibility about how I play it from that point. And if it falls apart between now and then, no big deal, because I was just plinking and just doing little accumulations, and if it doesn't materialize into anything, it's no big loss.
All right, so looking from a Fibonacci standpoint, you're coming up on the 61, which is 1848. And then if you want to look at an extension, that's the 30.59 mark for the 127 extension.
Yeah, and that 30 level is probably going to be where some consolidation happens, because that's really where it stalled out in the past, and it had a failed breakout above 30 in 2011, and that was the resistance level that it has fallen from since then. So the point is, anyone who was in this since from 2005 till 2011 when the Fukushima thing happened, they're going to be in there looking at, hey, I could break even on this thing, somewhere in the range of $30 a share to $45 a share. Like, that's going to be a distribution level.
Right. Do you think somebody would have held it that long?
Well, institutions hold it that long. Yeah.
Because I'm looking at it, I'd be like, screw this, I'd lost.
Well, yeah, you or I would, but there are people that they, when they buy something, they don't buy a lot necessarily. They'll buy it forever, and if they've been holding it for 10 years and they look down, at the end of the quarter on the quarterly statement or whatever, and they see they can get all their money back, then they're going to take that money and essentially like say, oh, see, it was worth the wait. I didn't take a loss. There are people that really do that, sure. I mean, I don't know that that's what's moving the market. It's more institutional.
Money ratio.
Yeah. Well, Chris, I probably got to wrap it up here, but it's been a great session. I think maybe this has been one of our best shows yet.
I agree.
All right. Well, hey, thanks for joining, and hopefully we get you on at least once or twice more this week.
All right, cool. I did enjoy it.
Awesome.
Thank you very much, John.
All right, and just one more time for everybody. Chris is Sell the Fucking Rip Trader at STFR Trader on Twitter, and I'm John Tate at JONTAIT on Twitter. Please help us get the word out on this show. It's a pretty new show. Chris is a regular guest. He's going to be joining probably several times a week, I think, if not even more often. So, all right. Well, thanks, everybody. Good night.
Be good.